All right, everybody, what is happening? Hope you guys are doing great. Now, in this lesson today, we are going to cover the trend, okay, part of the TLC method. All right, and so we're going to spend some time going over understanding trends. What type of trends do we have? What it is that we're looking out for? When is it that we're looking to take an action, depending on the type of market that we're in. Where do we buy, where do we sell, right? And so real quick, we're just going to quickly go over the syllabus, if you will, here. So the TLC method is broken down into three key core components, which is trends, levels, and then candlesticks. Okay, so in this first lesson, one of many lessons, all right, and I'll be doing these weekly videos, weekly lessons for you guys, so that you can really hone in on this skill. Okay, trading isn't it isn't an exact science. It's an art, right? Just like musicians, okay, just like carpenters. There's not you can't just get into it and expect to kind of create a masterpiece, right? It takes time, practice, and in the case of trading, sometimes spending some time observing the market and understanding the ebb and flow. Okay, and so let's dive straight into understanding a little bit more about trends. If you have any questions, just leave them in the comment section below. As the video plays along, just drop your question, drop a comment, and I'll be sure to do a Q&A within the comment section itself, answering any questions around today's topic, which is trends. Okay, so let's get into it. Okay, so first of all, we got to break it down and summarize it and understand the way the markets move. Okay, because ultimately we have two choices, we have two decisions that we got to make. Okay, do we buy or do we sell, right? And if we're not doing either one of those two things, then we're not doing anything at all. We remain patient, and we will remain observing the situation, the current market situation, right? So when do we buy and when do we sell? To answer that question, we got to first understand how is it that the markets move. Okay, how is it that the markets move? Why the markets move, I guess, is a separate topic and a video for another day. But today we just want to understand how it is that the markets move. Okay, so the markets move in one of three possible directions. Okay, one of three possible directions. Okay, it's either doing one of these. In terms of the way that the market's moving, it's doing one or the other, like there's three ways. Okay, so we're either moving upwards, we're either moving sideways, okay, or we're moving in a downward fashion. Okay, now with all of these three ways that the markets tend to move, there's always an oscillation occurring. Okay, so whether we're going upwards, we're oscillating upwards, we're not just shooting upwards. All right, we're not just shooting upwards. And if we are shooting upwards and it's moving fast, or it's moving exponentially, if you will, then those are types of markets you kind of want to stay away from and wait, because what goes up must come down, and what goes up, it can't go up exponentially upwards forever. There's these pullbacks. Okay, if it is to go up, it will oscillate on the way up. Okay, and I want to break down what it is that I mean by these oscillations and help you understand these three types of market phases. Okay, because again, we're in one of these three different phases at any given time. We're either moving upwards, oscillating sideways, or oscillating downwards. Okay, so it's either an uptrend, a ranging market, or a downtrending market. Okay, so let's get into understanding the lingo behind an uptrend. Okay, understanding more about what an uptrend is. Okay, so here we have an uptrend. If I grab my pen tool here, okay, we can see that in this case this would be time, and here we would have price. Okay, these are all your different price levels along here on the right hand side. And so price, if it is, okay, if it is to go from point A to point B, price typically, it doesn't just shoot straight up to that level. Okay, it doesn't just shoot straight up to that level. What it will do is it'll oscillate on its way up. Okay, so it'll create these peaks and these valleys, these peaks and these valleys. This is what price does. All right, price doesn't do this. Price doesn't shoot straight up. Okay, maybe oscillate downwards, up, up, and then bend over backwards, and then around in circles, and then square shapes. This is not how the markets move. Okay, the markets don't move like that. It's obviously impossible, right? So it's only moving from left to right in a linear fashion. And you know, when you see price moving kind of exponentially, you kind of want to stay away from that, because what tends to happen is most people buy too high. So as it's exponentially growing, you know, if you're familiar with cryptocurrency or Bitcoin back in 2017, 16, 17, as price was shooting up, if you look at the market, okay, on the charts, and you see it visually, you'll notice how it just shoots up exponentially, looking like it's going to shoot up straight to the moon. Okay, but that's not the case, because it's impossible for the market to continue flying straight up vertically exponentially. Okay, it has to snap back down before it carries on going back up, if it is to carry on going back up, right? So we're limited in these three ways that the markets move. And so in a case of an uptrend, if we're to move from one price point to another price point upwards, we don't just shoot straight up. What we do is we oscillate, creating these peaks and these valleys. Okay, these peaks and these valleys. Now, you know, in trading language, right, we refer to these peaks and these valleys as higher highs and higher lows, higher highs and higher lows. And what that means is that as price goes up and creates a peak, comes down and creates a little valley, okay, this has left its mark in time. Okay, that peak, it's left its mark. There's no turning back. We now have a turning point. We now have a peak that's apparent, it's obvious, we can see it. Okay, and what we're doing is we're waiting. Okay, we're waiting for price to come up again, because price doesn't go up forever. It eventually turns around, so it comes down and it creates this valley known as higher lows. Okay, when a previous peak has been breached, meaning price comes up towards the previous peak and breaks past, okay, and through this peak right here, okay, and closes and goes up and above this previous peak right here, it's known as a higher high. Okay, so we've just created a higher high. Okay, so we have a higher high, and then again, price doesn't just shoot up exponentially, it oscillates and it tends to retrace or pull back. Okay, as we do that, it comes down and it creates a valley. Okay, it creates a trough, right? This is known as a higher low, because this low, it's higher. Okay, this valley, okay, this V-shaped valley, it's higher than the previous one. Okay, so this valley right here, it's higher than the previous higher low. Okay, so it's a low, it's created a low, it's created a valley, it's come and turned around, it's created a valley, and this valley happens to be higher, okay, above the previous one, just like steps, right? It's like kind of stepping upwards, right? So we have higher highs, higher lows, higher highs, higher lows, right? Higher highs, because we've just breached this previous high, okay, and we've gone up and we've shot up above this previous high, right? Higher highs. And then what you'll expect and anticipate based just on this pattern is, again, we know that price doesn't just shoot up exponentially. It has to, okay, it has to. It's not a case of, you know, if it's going to turn around. It's really when. Okay, when is this going to turn around? Is it going to turn around now? Is it going to turn around now? Okay, and we wait for it to occur. Okay, we wait for it to turn around. We just watch it going up, 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 up. We're not going to sit there thinking, oh, we've missed out. You know, and a lot of the times most people buy too high because of FOMO, fear of missing out. Okay, they end up buying too high, right? So we don't want to buy too high. We want to wait for it to come down, create these higher lows. Okay, as long as we remain above a previous higher low, then, you know, we anticipate as long as price remains above this previous high low, then we anticipate and expect another high low to occur. Okay, so higher lows, and then what would you expect next? Just looking at this chart, a higher high, right? What would you expect next? Higher lows, right? What would you expect next? Just following this pattern, right? What would you expect next? You'd expect price to go up, okay, go up and create further highs, right? That's what you would expect. Now, if you think and you expect and you can see that the market's likely to continue moving upwards, okay, as we have here, right? If you expect that markets are likely to continue moving upwards, what are you going to do? Okay, you're going to sell or are you going to buy? Like, what would you do? Are you going to buy or are you going to sell? If you think the price is going to go up, are you going to buy or are you going to sell? You'll be looking to buy, okay? And so if you thought that you would be looking to be buying at a higher low as prices turn around, okay, we're ultimately moving in this upward direction, and now we've created a pullback, prices retraced and created a higher low, you'd expect and you'd anticipate you'd be looking for buying opportunities in this high low area zone territory, right? In anticipation for further higher highs, okay? And so this is an uptrend. It's made out of two components, higher highs and higher lows, okay? And we're looking to be buying at higher lows, okay? We're not buying on breaks, okay? We're not buying every time. If I get rid of all this, okay, we're not looking to buy when price breaches this level, okay, boom, it breaches. We're not looking to buy here, okay, because we don't know whether this is going to be a false break, meaning it doesn't actually, it breaches it just breaches above this peak, it breaches it just by a couple of pips and then turns around back into it. We don't know whether the market's going to do that, okay? And you got to understand that the market's, it's never moving as perfectly as this analogy here, as this example here, where it's giving you these higher highs, higher lows, higher highs, higher lows. It's never moving as perfectly as this. It'd be too easy, right? That'd be too easy. And I'll explain. I'll break it down, and I'll show you examples of examples. In fact, we'll do that now. I'll show you some examples of price not actually moving in this perfect formation. Okay, so higher highs, higher lows, higher highs, higher lows. These are two terms that you want to write down, note down, and observe and anticipate to occur and look out for. Okay, before we go into an example, it's important. Okay, and you won't find this in traditional trading education. Okay, what you'll find a lot of the times is people and educators, and what you'll find is they'll say that you want to wait for a higher high, higher low, a higher high, higher low, and then now we're in an uptrend. Okay, now it's confirmed that we're in an uptrend. This is what you will find a lot of traditional trading education teaching, that it's a confirmed uptrend once we've created two highs. Sometimes they'll even say three peaks, three higher highs, okay, and three higher lows. Sometimes they'll say it's confirmed here. Okay, so when is it actually confirmed? When has this uptrend initiated? There's no point, okay, there's no point calling an uptrend in hindsight once it's already kind of created a couple of higher highs, right? 2, 3, 4 higher highs, because it might actually be ready to start turning around. Because as you zoom out, okay, as you zoom out of this picture, in fact, let's just do this. Let's zoom out here, okay, and let me give you this nice example here. Okay, so higher highs, it's a bit too big. Okay, so higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And so a lot of the times you'll find people saying, oh, it's confirmed. Okay, now we're in an uptrend, now we're moving upwards. Okay, but because they're so zoomed in, okay, they're not aware of what's happening on the macro picture. They're down in the micro picture, looking in, zooming in. They've spotted a little trend and they want to follow the trend, because you're being taught that the trend is your friend, which in some sense it's true. The trend is your friend. You want to go along with the trend, but for how long? Okay, how long is this trend going to remain your friend? Okay, because friends, people in your life, they come and go. Trends, they come and go. They don't last forever, right? And so we got to be wary of this. We got to always remain objective and understand that, you know, situations like trends turning around, they're very likely to occur and happen. So we got to be ready for them. We got to kind of always have the bigger picture in mind, the macro picture in mind. Because now if you say, oh, now the trend's confirmed, now we should be looking for an buying opportunities. You see higher highs and then you start buying, higher lows, prices going up. You're thinking, yes, we're making money, price is going up, okay? And then this happens. Price drops down and smashes below all these previous lows, all these lows right here. It smashes below these lows. You didn't have a stop loss, or you had one and then you got rid of it because, you know, you thought this is going to carry on going up. You became more and more greedy, thinking that price is going to carry on going up. But this happens where price drops. You're thinking, how could I have taken advantage of this? How could I have avoided this and avoided going long here? And how could I have, if anything, how could I have gotten in on this move where price just dropped? How could I have sold it? Okay. Now, if you zoom out, a lot of the times in the macro picture, what you'll find is prices just came down and now we're pulling back up. And as we're moving up, remember, we don't just shoot straight up like this. What we do is we oscillate, okay? And so this just might be a little uptrend, okay, on a pullback in the macro picture. I hope this is making sense, right? And then you would have looked at this and you would have said, oh, you know, we've uptrended our way. We've created higher highs and higher lows up into a lower high in the macro picture where price is likely to drop down, right? And so there you could have prepared for possible short opportunities. Yes, you could have followed the trend and taken profit, followed the trend, buy as low as you can, taken profit as high as you can, buy as low as you can, taking profit, and then coming into areas, levels, zones, okay, where on the macro picture, it's likely to be lower high territory where this is somewhere you could have been able to bank. So where is the trend confirmed? How do we not end up buying too high in a trend? How do we avoid buying too high in a trend? That's the question. So here's what I say to that, okay? An uptrend, it always starts, okay? And remember this, it always starts off with one move. There we go, okay? Just like that, starts off with one move, okay? As soon as you see price moving impulsively upwards, maybe you got 1, 2, 3, 4, 5, couple of candles here, okay, 3, 4, 5 candles. As soon as you see that up move, you can go into the micro picture and you will see that it's just shot up like this. Its price has just moved straight up, okay? Now again, we know that price doesn't just shoot straight up, right? We understand that price oscillates, it retraces and goes back up, retraces and goes up, right? Creating these high highs and high lows. And so you'll notice price has just moved up. Now this is where an uptrend has started. This is where you get ready to look for buying opportunities, anticipate higher lows, so that you're already in on the trend, banking on the way, maybe even scaling in and adding to your position. Maybe you're letting your winners run, okay? We want to buy as low as we possibly can in a trend, okay? And a trend starts off with just one straight move, okay? You can see it's just a couple of candles, it's just a straight move. In that move, there's not necessarily any pullbacks, it's just straight upwards, right? And this is where the fib tool comes into place. If you haven't watched the video on how to use the fib and how to measure these moves, just these one moves, okay, all you're really doing is you're measuring from one turning point to another turning point, okay? In this case, you'd have been measuring from here to here with your fib tool, okay? And again, make sure you watch the fib, the ruler, okay? It's the measurement tool that I use, Fibonacci tool. I call it a ruler because we're just measuring from one turning point to another turning point in anticipation for price to come down, and we want to get in, okay? We want to get in before trends initiate, okay? We want to get in before you know, because there's no point going back in hindsight and saying, oh, it would have been a great place to have bought here. There's no point. That's not going to help you, okay? You want to get in before the trend goes up, okay? So from what I teach and what I share, okay, a trend, there's no point of confirming a trend once it's already happened, you got to get in before and bank and take your profit, hit your targets, okay? And you do that by preparing as soon as you see that move up. That's how an uptrend starts. It starts with just one move, okay? It hasn't started after, you know, 2-3 highs. It's already gone up too high. There's no point buying too high. And I'll give you some nice examples, okay? Stick around, watch till the end of this lesson, and I'm going to give you some nice clean examples of what it means to be buying too high, and how do you buy as low as you can using what I like to call top-down analysis, which I'll touch up on just a little bit briefly, just so that you can make sense of, you know, buying as low as you can in an uptrend. Okay, here we have top-down analysis. Okay, so right now we're covering uptrend, downtrend, ranging markets, give you some examples, and then give you an example of top-down analysis, which really does help you. You know, top-down analysis means we're looking at the macro picture, going into the you know, semi-macro picture, and then micro picture, and then semi-micro picture. We're just zooming in and honing in on specific areas, zones that we want to take advantage of, and regardless of whether it's buying opportunities or selling opportunities. So let's quickly go and take a look at an example of an uptrend in real markets. Okay, so now we can see this. Okay, and so immediately your eyes might be drawn towards these peaks and these valleys, these peaks and these valleys. Okay, and so you're thinking, you know, you might be looking at this and be like, where's your higher highs and where's your higher lows, right? Here's what I want you to understand, and this is where trading isn't an exact science. There's more of an art towards being able to read and understand and observe how the markets are moving. Okay, so here, and I'll draw over it, here we can see price has shot straight up, right? A couple of candles, price shot straight up, and then we came down and we created this higher low. So here we have this high, okay, here we have this low, right? And then what happened is price has just shot straight up, okay, breaking this previous high. Here's your higher high, right? This is your last swing low. Now you have a higher high. Okay, what would you expect next? This is where you'll grab your ruler. Okay, you'll go from your last low to your current high, and you will, you know, just to isolate this section here, okay, just to isolate it, here we have price just gone up from a previous low, okay, to now creating a higher high, okay, and now we're going to wait. Okay, we're going to start watching it turn around, slowly turn around, and we're going to start getting ready to look for possible buying opportunities, because this is likely to be an uptrend, right? And so we wait, and in this case you can see price came down, it created a higher low. Here's what you got to understand with higher lows. Okay, it's not a confirmed higher low. This is not confirmed until we've gone and created a higher high. Okay, but we gotta get in before it's even confirmed, because there's no point. And this is one of the biggest challenges a lot of people experience when trading the markets, is that they end up buying too high. They say, okay, this is a higher low, and now we've just broken this high, which means we're creating a higher high. Let's start buying. Let's start buying on the break. You're buying too high. You don't want to buy too high. Okay, you want to buy as low as you can to maximize your risk to reward factor, because a lot of trading has to do with risk to reward. Okay, so we maximize risk to reward by buying as low as we possibly can. And so here in this example, okay, and this applies with the opposite direction in a downtrend, which we'll get into, we want to buy as low as we can. We would have been ready for this and prepared for it. Now if we go back a little bit here, we've created this higher low, anticipated higher low. It's not confirmed. Let's say we're in. We've just decided to buy right here. Stop loss is here. We're in. Price goes up, comes down. It's created a little peak here, but it's not higher than the main one. It's not higher than the main one. Okay, we came down, we went up, we came down, we created a lower low based just on this move right here. Okay, but we're not going to, you know, change our bias and say, oh, we're in a downtrend, let's look to sell. Okay, We're not going to do that until we've created a higher high, a peak, and then we've dropped down, creating further lows, which I'll give you an example in a downtrend. But for here right now, if I delete this circle, remember this is your low. Okay, let's just get rid of everything. Okay, higher highs, higher lows, higher highs, higher lows. Okay, and now we haven't created any further higher highs, we haven't moved any lower than the previous low. Okay, as long as we are above this trough, this valley, okay, this V shape right here, we're going to be looking to be buying. Okay, in this case we came down, created a higher low. Okay, we haven't created a higher high, so we gotta be wary of possible pullbacks into the zone where it might even be another opportunity to buy. Okay, as long as we are below within this range right here, previous low and previous high, as long as we're within previous low and previous high. Okay, hope that makes sense. And now what happens is price goes up, comes down, we still haven't breached this high right here, and then boom, right there we've breached it. We've now created a higher high. Okay, this is a higher high, higher low, right, higher high, price range is up here. It doesn't quite create any further higher lows. Okay, this is your previous low, these are your highs, this is your range. Okay, so we've gone up all the way up here, price came down, created your higher low, and this is your higher high. Okay, now what I want to do is I want to get rid of all the noise here. Okay, so we're just looking at the peaks and the valleys, the extreme highs and the extreme lows. Okay, to do that, here's what I'm going to do. I'm just going to focus as I draw along. I'm going to draw and focus on the extreme highs and extreme lows. Okay, so here we have higher highs, higher lows right here, right? Higher highs, higher lows. Okay, where was the next higher high? Next higher high was right here. Okay, higher highs, higher lows, higher highs, higher lows, higher highs. Now you can kind of see that all of this was just noise because it was within a previous peak and a previous valley, previous highs and previous lows. And sometimes you'll find that it's not moving perfectly, price is going like this and then breaks below this previous low right here. Okay, and this is still higher low territory. Okay, and then boom, price goes up. And so here you would see higher highs, higher lows, higher highs. Okay, and this is what you gotta learn, this is what you gotta observe. Okay, let's see if we can quickly go and find an example in the actual market itself. Let's open up the charts. Okay, let's zoom in. What is this? Pound yen. Okay, all right, let's go down to the 15-minute. all right, and so here, just in this little snapshot here, I want to show you. Okay, here we have a high, a peak, okay, a valley, higher high because we just broke this high. Okay, higher low, a higher low right here. Okay, and then price goes up and then it comes down. Okay, still, you know, as long as we remain above this previous confirmed higher low, okay, as long as we remain above this previous confirmed higher low, okay, any pullback into this zone, maybe you've bought already here, we don't panic when it comes back down again. Okay, we're not going to panic when it comes down back down again, right? Because it's still anticipate higher low territory, because it could have very easily had come down and just broken this low right here. Could have easily just done this and then gone up, and in hindsight you still would have looked at this as higher highs, higher lows, right, with all of this being noise. So this is something that you gotta kind of learn and observe, that if we've created a previous higher high, then the next higher low is always anticipated, it's never confirmed. As long as we remain above a confirmed higher low, right, a peak, a low, and then boom, this has broken a higher high, as long as we remain above this turning point and this turning point, even here we are yet to even break this high right here, we haven't broken it. Okay, so any pullback tomorrow, this is what I'm looking for in pound yen, any pullback tomorrow, okay, as long as we remain above here, I want to look to buy for higher highs. Okay, because in this case it would look like something like this. Okay, if that played out, high highs, high lows, high highs, and if we did turn around tomorrow, okay, high lows, high highs. Okay, hope this is making sense. Okay, I'm getting a little bit too deep into it, but I'm trying to, I want to really kind of break it down and hope that this is making sense. Okay, and again, if it isn't, make sure you leave questions in the comment section below. I'd love to answer them and make sure that this is very clear to you. Okay, so this is an uptrend. We'll follow it just like this: high highs, high lows, high highs, high lows. Okay, where's the next high? It's not this, it's not this, it's not this, it's right here. Okay, where this high was breached, right here. Okay, so we would say higher highs, okay, higher lows, higher highs, okay, and then we ranged up here, not creating any higher highs. Okay, this is the peak, right? So higher highs, all right, and then we came down, higher lows. We're still above this previous higher low. Okay, so here we go again: higher highs, higher lows, higher highs, higher lows, and then this next higher high went all the way. I'm just imitating what's happening here, right? Went all the way up here, created this high, came down a little bit, higher low, right? And then we went up, created this high, and then we obviously ranged for a little bit up here. Okay, and then we came down, created this high low, which is right here. Okay, and then we shot up. Okay, hope now kind of separating it from the chart behind it, separating this and drawing it independently, you can see that it's an uptrend, right? This is what the art is ignoring all the other oscillations that's happening in between. Okay, ignoring all the oscillations that are happening in between, because there's the micro lower time frame trend. This yellow line is imitating, you know, lower time frame trends. It's just, you know, squiggling around. It's going up like this, comes down. Okay, these are lower time frame trends. All right, this is a macro picture. The yellow line is the lower time frame. Okay, so this is where top-down analysis really comes into, gives you some perspective with understanding trends. Okay, you gotta really utilize and understand top-down analysis to make sense of this. Okay, maybe rewatch this section after I've done the top-down analysis example. Maybe come back and rewatch this section, because, you know, this is what it really comes down to, or this is what it really boils down to, is understanding where you are in the grand scheme of things. Where are you, and where is it that, and you know, which part of the picture are you looking to take advantage of? Okay, because there's hella opportunities down in the micro picture, which is the yellow line, for example. Okay, all right, so let's move along. All right, I'm not going to spend as much time in the downtrend example, because it's exactly the same thing with an uptrend. It's just in the opposite direction. And so let's move along and explain what a downtrend is. A downtrend similarly also has these peaks and these valleys. Okay, but they're just referred to differently, because, you know, the valleys are what we're looking to be broken. Okay, so, you know, a previous valley, and so let's go ahead and draw along here. Okay, so here we have a low, a lower high, a peak. Okay, and boom, right there we can extend the line outwards. Okay, and watch and wait for price to break that low. Okay, if anything, we remember, okay, when does an uptrend start? It starts with that one move. When does a downtrend start? A downtrend starts with that one move. And here we've had that one move. Price came down, and now we're ready. We want to be ready for possible opportunities for pullbacks. Okay, because the same thing applies. Price doesn't just drop straight down. Okay, in fact, here's what you got to understand. Okay, when price goes up, it takes the stairs up. Okay, it'll take the stairs upwards. Okay, so it'll slowly go up. When price comes down, it takes the elevator down. Okay, because people experience, you know, fear. Okay, fear is a much more stronger emotion than pleasure, than gain. Okay, people are in fact 2.3 times more. Okay, fear is 2.3 times more of a powerful emotion than pain. And that's why, you know, when markets drop or prices drop, you know, people tend to panic sell, and it just drops. So in the case of price dropping down, yes, price drops down, but even within that drop downwards, where it's just falling, price is just falling, free falling, even within that move, there's a lot of the time there's the same thing. The oscillations are there. It's just very quick and snappy, right? You know, when you see falling markets like Dow Jones, it took, you know, how many months for price to go up. I'll give you an example here of price just falling. It was Dow Jones. Here, look at this, okay? Check this out, okay? All right, it took price from here, okay, from here, 1 month, 2 months, 3 months, 4, 5, 6.5, okay, 6.5, just over 6.5 months to go from here, okay, from here to up here, okay. That's how long price from here to all the way up here, okay. It's taken 6 months for price to go from this price, okay, maybe a little bit lower, to all the way up here to this price. It's taken 6 months, okay. But on the way down, it's just taken 1, 2, 3, 4, 5 days, okay. What took 6 months to climb up to this price, okay, from about 25,000 all the way up to 29,500 ish, okay, 25,000 to 29,000, nearly 5,000 points, if you will, right? It's taken 6.5 months to cover that distance. And like I said, when price drops, it drops very quickly, okay. So price likes to take the stairs up and the elevator down. But even when it's dropping and people are panicking, okay, I'll give you an example. There's these lower lows and lower highs that are being formed. You just got to zoom in on it. So here right now on the macro picture, on the daily time frame, it looks like price is just falling, free falling, okay. But if we zoom into this navy section that I've highlighted and go into the micro picture, you can see that, hey, we didn't just fall, okay. You'll see and you'll notice we didn't just fall, okay. Remember, I just highlighted 5, 6 daily candles, a macro picture, right? But when we come down into the hourly time frame, micro picture, okay, lower time frames, we can see that, you know, price didn't, there we go, lower lows, lower highs, lower lows, lower highs, lower. Can you see that? Okay, there's these oscillate, boom, lower lows. Can you see that? Okay, we do oscillate downwards. So there's this oscillation still occurring down on the lower time frames in the micro picture, which we can take advantage of, okay. I was actually, where was I? I was actually looking to sell based on this time frame. Actually had a position here, okay. Price came down, went up, came down, okay. Right here is where I sold, okay. Right here I sold this, price came down, and then this candle kind of snapped me out. It took me out, but I was short on here. Nonetheless, I was looking for that oscillation, okay. And even though I sold it up here, okay, it's not a confirmed lower high because we didn't create lower lows. Price came back up, you still look to sell. There was another opportunity here, and then there's hella opportunities along here in the lower time frame, okay. And so again, like, more on this stuff later, and I'll be doing more videos really kind of diving even deeper and deeper into understanding the way candlesticks are forming and the way how to identify trends just by looking at candlesticks, because these trends are embedded within candlesticks, okay. You know, and these oscillations, there's a psychological meaning behind them, and you know, we got to understand the psychology behind these trends, okay. So right now we're just kind of looking at the patterns that occur in this oscillation, and later on, as we go into more into these slides, we're going to cover fear and greed and sentiment, okay. This is really going to help you make more sense of, you know, these peaks and these valleys, these you know, these higher highs and higher lows, or in a downtrend, lower lows and lower highs. You're really going to be able to make more sense of this in later videos. Be sure to check them out, because again, it's just going to make more and more sense. Understanding a downtrend is just going to become a little bit more clear to you, and likewise with an uptrend. So let's continue, okay. So lower lows, lower highs. Maybe you're ready to look to sell up here anyways, right? Lower lows because we've just breached and broken a previous low. Lower high, lower low, lower high, lower lows, lower highs, lower lows. What would you expect and anticipate next? What would you expect and what would you anticipate next? Lower highs, right? You'd expect for price to come up. Prices come up. What would you expect and anticipate to occur next? Or take a guess, right? What would you think and expect to anticipate next? Okay, so we've got lower lows, okay, lower highs forming, happening, occurring right now. Okay, what do you think is going to happen next? Great. Okay, if you thought that price is likely to continue moving downwards and create further lows, then what would you do? Would you look to be buying or would you be looking to sell? You'd be looking to sell, right? You'd be looking because you think the price is going to go down. You'd look to sell it, right? Because you think the price is going to go down, and you expect price to go and move into your favor. And hey, if it doesn't go in your favor, this is why we have stop losses. Okay, make sure you check that video out as well. Okay, you want to learn about risk management and protecting yourself, protecting your capital. You know, as traders, it's very important. It's all about capital preservation. As much as it is about making money, it's also about protecting what it is that you have. Okay, so this is a downtrend, and so a nice clean example would be here. Okay, nice clean example would be right here, where we have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, maybe, right? Also understand that, you know, this might be the macro picture. You don't I don't have a time stamp here to say what time frame this is. Okay, but just for the sake of an example, understand that there are trends. Even as price is pulling up, you might be in the macro picture. Okay, sorry, you might be in the micro picture. You might be zooming in into this section right here. Okay, and you're so zoomed in, you've zoomed into those candles, you're down into the lower time frame, and you're sitting there and you're seeing this higher highs, higher lows, higher highs, higher lows, and you're looking to buy, and you buy, right? And in actuality, price just boom, tanks. Okay, same example as I gave earlier. This is why top-down analysis is important. This is why being aware of the grand scheme of things, okay, what's happening in the bigger picture, it's so important, because you know there's opportunities to be taken advantage of. Okay, and you don't want to get lost. You always want to remain objective. You always want to be observant. You want to remain neutral. You don't want to just remain, you know, have this bias of just buy. Okay, and again, the more you practice, the more you become aware of this, the better, you know, the more skillful you become. Okay, all right, so this is a downtrend, and again, a nice example there of, you know, keeping an eye on the macro picture, because you know you would have saw this lower high and you would have sold it instead of being zoomed into the micro picture and just buying in that little uptrend that you will see. Yes, there's an opportunity. There's opportunities to, you could go in there, have a buying opportunity, secure your position, take some profits, and then still look to sell. You could still do that. Okay, but you know that it does come down to your risk tolerance. It comes down to how aggressive you want to be, and it does really come down to where you're at in your trading journey. Because I would say if you're brand new, you want to take as many of these opportunities as you possibly can, just so that you can fine tune your skills. Okay, it's like kind of keeping your the tools in your toolbox sharpened, right, and ready. All right, so this is your downtrend, and then finally, I want to talk about a ranging market where price is just moving sideways. Okay, now there's a few things you got to understand with ranging markets. Typically, after long moves, strong bullish momentum, or you know, very weak bearish momentum, typically the markets like to start ranging. Okay, and a ranging market is basically where markets are just ping-ponging in between two price points. Okay, so let's grab our pen, and so here we have time, here we have price, you know, we have price along here, and what price is doing in a ranging market is price is just oscillating and moving sideways. Okay, that's really what it's doing. Okay, now even though we're moving sideways, understand that in the micro picture, okay, zooming into the lower time frames, you'll still find that even though price went up in this section right here, it oscillated up. So there's a trends here. So there's trends here. Sometimes price will come down and you just range down here for a little bit and then shoot up. Okay, there's trends within trends. Okay, so even in a ranging market, price is still oscillating. A range is typically because you see it on the macro picture. When you go into the micro picture, and you're down here and you then zoom into the micro picture and you're like, okay, this has been ranging, this is a level, this is a support level, which again, support and resistance levels are covered in a separate video. It's important that you just focus on these trends, focus on the way the market moves, a market structure. Okay, I mean, this is really just the way the market's moving. Okay, even structures, there are particular structures that I personally look out for, but one step at a time, right? You want to master the art of just being able to identify the types of markets that we're in. Okay, so price is down here and we expect, okay, we're at a level. Okay, let's zoom into this section. Okay, so we've been oscillating downwards. Okay, and now we're here. Okay, right there. Okay, I'm giving an example of what's happening in here, and we're here, and we're ranging, and you expect that we're at the bottom of the range. We've been trending down in the micro picture at the bottom of the range, and we expect and we anticipate price is likely to respect the range and continue ranging. We're at support, and on the micro picture you see, boom, price shoots up. Okay, remember what I said about an uptrend? Typically when uptrends, or an uptrend or a downtrend, how is it that they first start off with? We don't want to look at it and be like, couple of peaks and valleys later and then say, oh, we're in an uptrend. We want to be able to get in beforehand, right? We want to be able to buy as low as we possibly can. And an uptrend starts off and is confirmed, not after 4 or 5 peaks and valleys. It's get ready for the first move. Okay, right here we see price just shoot straight up, measure it, get ready to get in, high lows, high highs, high lows, high highs. And this is a perfect example of when price is when it's likely to change direction, which I don't have a slide on that, but I'll explain it. Okay, now you understand an uptrend. We're oscillating upwards, so we're creating these peaks, these valleys, higher peaks, valleys that are higher than the previous, these lows. Okay, these valleys that are, it's a low. Okay, it's a V shape, but it's higher than the previous one. So higher lows, higher highs, higher lows, right? Higher highs and higher lows. We understand an uptrend, we understand a downtrend, we understand ranging markets. We understand that even though we're moving upwards, okay, we're moving in an uptrend, this just might be a move upwards into a lower high. Okay, even though we're moving upwards, okay, when we see this uptrend, it might just be moving upwards into a lower high, right? And so we understand the macro picture, we understand micro picture, we have to kind of understand where we are in the grand scheme of things, right? And now that we understand that, when is it that price is likely to turn around? Okay, prices typically they're likely to turn around when it's broken previous lows. Okay, so high highs, high lows, high highs, high lows, high highs, high lows, high highs. And you'd think a high and low, but price comes tumbling down. Typically you'd want it to break 1 or 2 lows, okay, before you say, okay, now let's look for price to come back up, and then possible shorting opportunities, okay, possible selling opportunities. All right, and this right here, you'd see it's like a head and shoulder market structure, which we're going to get into in a separate video. Make sure you check out all the videos, and you're learning as you're going along. And sometimes we can anticipate and predict, okay, and take advantage of trend changing direction, because we're not going to move up forever. Even if we're oscillating upwards, we're not going to oscillate upwards forever. Okay, same way with going downwards. When these turning points, these highest, low risk, high reward opportunities, when are they likely to occur? When did they form? Typically there's structure that occurs Again, sometimes the market likes to range at these peaks and these valleys. There's high probability opportunities that come every once in a while that we can take advantage of. Okay, excuse the sirens, hopefully the microphone isn't picking it up. And so now we understand all these different types of ways that the markets move. How many? There's three. Okay, there's three ways that the markets like to move. We're either moving upwards, downwards, and sideways. And even when we're moving sideways, depending on the the picture that you're on, whether if you're on the macro picture, zooming into the lower time frames, even inside the range, as we're moving up in the range, we're oscillating upwards. As we're coming back down towards the low of the range, we're oscillating downwards. So technically there's only two ways that the markets are moving. We're either oscillating upwards or oscillating downwards, and those two combined sometimes create a macro picture range. Okay, note that down, and hopefully again this is making sense. Here's an example of a ranging market. Again, it's never as perfect as just oscillating nicely and tightly in between this tight range. That's not the case. When you actually find a range, you'll find that a lot of the times that price is shooting up and then down and then up, down, okay, up into the range, resistance. Again, we're going to cover levels and then break the range and then use that range, roll reversal, nice previous support turns into resistance. Again, more on that stuff later, but this is a range. Okay, here we have the range. And so again, I want to point out that even though we have a range, okay, so macro picture range, yellow line, okay, yellow line, okay, there's the micro picture. We can go into the lower time frames, and even here I can see there's a little trend going upwards. I can see there's a trend going downwards. Okay, I can see prices oscillating upwards. Okay, can you see that? There's trends within the trend itself. All right, and then price goes up, comes down. Okay, and so we gotta be aware of where it is that we're at. Here is very nice little opportunity up there. I remember actually selling this. This is gold. I know this, very familiar with this screenshot. This is gold, and right up here I sold right here as price came down. Okay, because top of the range, I think price is going to come down. How is price? We're right at the top of the range. Okay, we shoot up above the range. Okay, and then we drop, and then I measured from here to here, and I'm getting ready to sell. We came back up right here, and then I sold it. Okay, sold it all the way down to the bottom of the range. It was a nice trade. Then we created this lower high right here, and then we broke the range. Okay, so we broke the range, and then I measured from here to here. Okay, and then price shot all the way back up. Okay, came down, shot all the way up, it oscillated, and then shot up right here. This was Eid day. Okay, so it's a Muslim celebration. It was Eid. Okay, I remember right there was Eid, and I came back from Eid prayer, and just saw this happen right there, and I'm like, man, I missed out on this. I know a couple of students took this trade on Eid. It was a great trade, and gold actually continued tumbling down. But even here you can see that we've had this downtrend. Right up here, price went up, dropped all the way down. You can see this downtrend coming out of the range. Okay, because we're not going to range forever. We don't trend downwards forever. We don't trend upwards forever. We always got to be ready and prepared for that one move. Okay, and I want to kind of sum up the range stuff here. If you're thinking that market's going to go up, okay, and we're going to create an uptrend, remember that one move, you're already ready. Okay, you're ready for it to come down so that you can look to buy. Okay, but you're also ready for it to come down and look to buy even lower, because we might range. So that one move covers you for a possible range and a possible uptrend. Okay, and same with a downtrend. One move, you're getting ready for possible lower highs so that you can sell, right? But you're also ready for possible ranges so that you can also sell and trade the range itself. There's no point calling it a range once the range has already happened and once it's already occurred. Okay, hope this is making sense. And if it isn't, you got questions, you're confused, type away. Okay, because I want to go inside the comment section and I want to answer some of your questions. I want to make sure that you're getting this, you're making sense of this. I want to make sure that you know that you get what you truly deserve, okay? Because you deserve to learn and understand how to trade the markets consistently, profitably, reliably, without all the stress, because trading can be stressful if you let it be, okay? If you trade in a way where it's stressing you out, it doesn't have to be stressful, okay? You can actually trade stress-free by managing risk, understanding what it is that you're doing, being able to look at the markets from a different perspective. Because when I see the markets, when I'm looking at the charts, I'm seeing human behavior, right? I'm looking at human behavior. I'm anticipating how are people going to behave, okay? And then that's getting into more about greed and fear and greed and sentiment, which again is a separate video. If the video's out, make sure you check it out. If it's not, just stick around and make sure you stay tuned, because I want you guys to maximize profitability, and I want you to be consistent. I want you to be I don't want you to experience what a huge portion of traders experience in the market, which is constant losses, overwhelm, fear, not knowing. I know people who've been trading for 4, 5, 6 years and they still haven't figured it out. They're still not consistent. They're still not profitable. They're still confused. They're still jumping from system to system, and they're not giving up. They don't give up. They don't give up. Okay, a lot of the times people don't give up because they know the potential. They're aware of what's possible with being able to trade the financial markets. So I want you to get this right now and understand this. And if you're not, then again, leave comments and questions in the comment section below, and I'll be more than happy to answer them. Okay, so some rules here, okay? Trend trading rules. All right, remember there's two decisions. You're either buying or you're either selling, okay? You're either buying or you're selling, right? There's nothing else that you're doing in the markets. So when do you buy? When is it a good time to buy? If market's downtrending, you don't want to be looking for buying opportunities in the downtrend unless you go out into the macro picture and it's trending down into a level where you wanna buy. Okay, an example of what I've just said. You don't want to be buying in a downtrend. You can see that it's creating lower lows and lower highs. You don't want to buy into a downtrend unless price has been moving up. Let's make this a little bit bigger. Unless price has been moving upwards, okay, higher highs, and now we're trending downwards into higher lows. And so right here, maybe we've been trending upwards like this, okay, we oscillated down here a little bit in the micro picture. We've gone up, we're oscillating down. You don't want to be buying, you don't want to be looking to buy in a downtrend, okay, unless it's at a higher low in the macro picture. And so we've been trending down. That's the exception, is trending down, and now you want to buy as low as you can in the lower low territory, or you want to wait for the up move where boom, prices have been breached, peaks have been broken, and then you wait for that retracement, and then you're in on that high uptrend. Okay, so buy low, okay, buy as low as you possibly can in an uptrend at higher lows. Okay, buy as low as you possibly can in an uptrend at higher lows. Okay, higher lows, not this down. Write this down. You want to buy as low as you possibly can in an uptrend. And again, how low is low? When do you know you're buying low? Okay, when do you know you're buying low? It's really relative. It's just relative to that up move. Okay, there we have a low, here we have a high, okay, because it's just breached a previous high and it says a high. Okay, we're buying as low as we possibly can. The closer we can get towards the low, the better the risk to reward, because we're targeting further higher highs. Okay, so the lower we can buy, okay, at least below 50% of this move. Okay, that move, right? 50% would be right here, 61.8 right here, 78.6 here, and the absolute low right here, where we could even look out for possible false breakouts. Maybe I'm going on too deep, but there's going to be separate videos on explaining this stuff as well. But we want to buy as low as we possibly can relative to what's just happened to the left, not years down the line, months into the past, because every moment in the market is unique. We want to be able to understand what's happening right now. Okay, what's likely to happen immediately. That's where we make money, not because of what's happened years ago. The past doesn't dictate how much you're going to make now. Okay, so we don't need to confuse ourselves or overwhelm ourselves with a whole bunch of indicators, squiggly lines, a support and resistance that happened years ago. Okay, we don't need to overwhelm ourselves, confuse ourselves. We just stay focused in the moment, understand that every moment in the market is unique, and that, you know, the markets, they don't, you know, there's absolutely no way that anyone can tell you what the market's going to do next. We just make decisions based on high probability, calculated, smart decisions. Okay, we're not being random with it. We're being a lot more strategic with the way that we're deciding to buy. So when we're buying low, when I say buy at higher lows, it's just relative to that move. Okay, that move might be a macro picture move, and I'm going to give you an example. That move might be a macro picture move. That move might be a micro picture move. Okay, if you're buying as low as you can based on the macro picture, then that's a decision you're making based on the macro picture, and you know, you're zooming in to make a sniper entry. Okay, maybe you're looking to take a sniper entry, and you want to, for example, here, let's say this is the macro picture, and then price is right into a level where you want to buy. It's predetermined. You zoom in right there. You go down into the lower time frame, into the macro picture. Okay, where, you know, price came down, oscillating down. Let's do this. Okay, lower lows, lower highs, lower lows. Yellow line is representing micro picture. Okay, boom, we're down into the level. Okay, so what I mean is right here. Okay, there's your level. Okay, there's your level. This is that level that I'm drawing here separately. Okay, and then here's your micro lower time frame price. Okay, we've just oscillated downwards, and now we're here. Okay, we're here, and then boom, price shoots up. So in the macro picture, you're in a level where you want to buy. Okay, but you can confirm. This is where you confirm it. You confirm. Right, I should have mentioned this earlier, but that macro picture higher low where you want to buy, you can go into the micro picture, i.e. lower time frames. Okay, you can go into the lower time frames and confirm that to be a level that you can buy by seeing how price moves away from that level. Okay, and how does an uptrend start? With one move. There we go, we've got that one move off away from a level that was predetermined. This level was marked out way before price even started oscillating down towards it, right? Way before price oscillating down towards it, it was already marked out, already predetermined. You expected price to move away from that level the way that it has, and it's now happened. You measure it, okay, and then you do the same thing where you can now look to buy, maximize risk to reward. Okay, maximize. That's what I'm all about, man. I'm all about, guys, okay, maximizing risk to reward. Okay, so again, this is what I mean by buying as low as you possibly can at high low territory, regardless of, even here I'm buying as low as I can, okay, relative to what's just happened to on the left based on the micro picture. And the fact that this has happened, you know, at a level that was predetermined on the macro picture, on the higher time frames. Okay, I predetermined this. Okay, now I'm looking to buy, but I want to maximize risk to reward, so I zoom in and I wait for this uptrend to initiate. Okay, when most people would wait for this, you know, they're waiting for uptrends, couple of peaks to happen. Now they're saying, oh, we've just broken previous highs, now we're buying. People are buying too high. Okay, most people buy too high. This is a industry standard. It's a fact. Okay, where the market's going up, most people are losing money. Where the markets are going down, most people are losing money. Okay, all right, so this is buy as low as you can in higher lows in an uptrend. Okay, now sell high, okay, in a downtrend at lower highs. Okay, so same thing, guys. Okay, same thing, lower lows, lower highs. Is it gonna do we sell here? Is it gonna turn around from here? Is it going to turn around from here? Okay, is it going to turn around from here? Where is price going to turn around from? Okay, where is it going to turn around from? Wherever it turns around from, ideally we want to sell as high as we possibly can. Okay, we want to sell as high as we possibly can, and then we can go into the micro picture as price comes into your level in the macro picture, a lower high. Okay, lower lows, lower highs, lower lows, lower highs. Okay, we can go in, zoom into that section, and then look for price to reject it. Again, yellow is micro picture. Okay, same thing. Okay guys, same thing, right? Except the opposite direction. We don't want to, you want to sell as low as you can in a downtrend. Sorry, you want to sell as high as you can in a downtrend, but you don't want to be selling in an uptrend. Okay, you don't want to sell in an uptrend, and the exception is this. Okay, let's say price is trending upwards. Okay, higher highs, higher lows, higher highs. We're not looking to sell in an uptrend. Okay, higher lows, higher highs, unless, okay, where we're looking at this uptrend, it just happens to be, okay, a lower high based on the macro picture. Then we can look to sell as high as we can, because here we are on the higher time frame, creating a lower high right here relative to this move. You know, we've got lower lows, lower highs, lower lows, and we're oscillating upwards. Remember, it's never perfect. There's always some trending markets here, maybe it's ranging along here. Okay, but we're just getting the extremes, the extreme end of the trend. When you do that, things become a little bit more clearer in terms of what you're trying to do. Okay, in terms of how low can you buy or how high can you sell. Okay, this example here, perfect example, is what I discussed here up here in an uptrend here. Okay, is when you just focus on the extremes. Okay, spent a great deal here. Here, look, you can avoid all of this noise because we're just looking for price to breach, remain above this high low and breach this high. Boom, higher highs. So now we got the extremes, the extreme. Okay, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, you see the extremes. Okay, you see the extremes. All right, that's what we want to focus on. All right, okay, so never buy or sell into an accelerating market. Okay, a lot of, you know, impulsive moves in the market, it catches a lot of novice traders out, new traders out, because we as human beings, we're impulsive in nature. So they see the market shooting up. People want to ride this momentum. People think, oh, it's going up, it's shooting up, it's happening right now, moving super fast. They want to ride the momentum. So they see it go up, they watch it go up first, and this is all happening within one candle. Forget about trends and ranging market and lower lows and lower highs. This is just flying high, and it's shooting up, and it catches a lot of people out. A lot of the times it's news announcements. Typically it's around news announcements, things like this happen, and a lot of new traders or novice traders or struggling traders or, you know, aggressive traders, they get caught out in these moves. And more times than not, man, these are impulsive. Like, you don't buy or sell into an accelerating market. Okay, don't buy or sell into an accelerating market. And by the way, guys, okay, these two things, okay, buy as low as you can, higher lows in an uptrend, or sell sell high in a downtrend at lower highs. They both cover the ranging market. Okay, so remember, how does a range start? How does it start? Price comes down. Okay, price comes down, lower highs. Okay, we're looking to sell anyways, and now we might not get the opportunity. Okay, these levels at lower highs, we're really, just because it's at lower high, we're not selling immediately. This is where candlesticks comes into place. Remember, okay, this is just trends. Okay, TLC, trend, levels, and then candles. So, you know, next we're going to cover levels and support and resistance, and, you know, psychological levels, major levels, minor levels, BRCs, the whole lot. We're going to cover all the important aspects, elements around levels. This is just one confluence. We want to be able to build a story and say, okay, you know, we're in an uptrend, higher highs, higher lows, higher highs, higher lows. Right now, price is at a higher low. Okay, buy. That's the rule. Okay, but before I buy, let's look at the candlestick. Okay, what level is it? All right, because we want to buy at psychological levels. We want to buy at support. Okay, and then what candlesticks is it? So we're giving ourselves, just because it's a high low, we're giving ourselves even more of a higher probability by combining the entire method, the strategy, together to give ourselves a series of confluences as to why we want to buy. We don't want to just buy just because of one thing. It's high or low. Doesn't matter. It could just carry on falling, right? With no confirmation whatsoever. This is why we wait. Okay, and again, a lot of this will make sense as we've combined all the lessons together, and do a summary of all these lessons, combine them together, and I'll have a video on this as well. Make sure you check it out. Make sure you stay tuned, where you'll be able to make sense of the entire strategy all in one video. Okay, so stay tuned for that. All right, so now finally, let's just quickly check how far. Okay, 1 hour into this lesson. Gonna quickly go into the top-down analysis, and maybe I'll even do a separate video on this. Okay, and so a lot of this is the macro and the micro stuff that we've been discussing throughout this entire session. Okay, here we're on the hourly time frame. Okay, right here is the hourly time frame. Okay, here we have a low. Price has been moving upwards. Here's how I would have traded this at this time. Okay, is I would have looked at it like this. Okay, price going up, would have waited for a pullback. Okay, would have waited for a pullback a lot more deeper, because I want to buy as low as I can. It doesn't give you anything deeper, it just carries on shooting up, comes down, creates a new higher low. So higher highs, higher lows, higher highs, higher lows. Okay, now I am still waiting for a deeper pullback. Okay, because on the macro picture, this is just 1, 2, 3 candles on the daily time frame, and I gotta be aware of the daily time frame. Okay, I gotta be aware of the daily time frame. So if we move along, okay, this is what it's looking like on the daily time frame. Okay, this is what it's looking like on the daily time frame. 1, 2, 3 days. 1, 2, 3 days. Okay, 1, 2, 3 days. Okay, look how it just shot straight up. Okay, small little pullback here. So I'm looking at the macro picture. This is top-down analysis. I'm looking at the macro picture, but I'm saying, look, if this is to carry on going up, remember, even though it's gone up like that, there's a trend within that move, and I want to see if I can trade that trend. Okay, I might have not been able to get in here because it didn't come deep enough. Follow the next one. The price came down. All right, and then I looked to create a higher low. It didn't come deep enough relative to this low and this high. It didn't come deep enough. Second candle, next day closed pretty strong. Okay, let's delete all of this. Next day closed pretty strong. Okay, that's your next day right here. Looking at the next candle. Okay, it didn't come deep enough. It just did a higher low up here. Okay, let's see if we can delete this. Did a higher low up here. Okay, it went up, came down, created the high low, and then higher highs. Right, I would have measured it, followed it, and right here would have been a nice opportunity to get in on this candle. Okay, am I following the right candles? No, this didn't happen until here. Okay, so based on this higher low, okay, okay, delete. Again, we're covering top-down analysis. Okay, let's delete everything. All right, so here price went up, it did retrace a little bit, but anyways, ranged here, went up, came down, retraced, went up. Maybe I should grab the smaller ink because it's easier. Okay, here we go. All right, price went up, came down, went up, little range here. Okay, there we go, little higher low, higher highs, higher lows. Okay, measure it from here to here and see if you could have got in there. Okay, no, all whilst we're waiting on the macro picture, this thing's just flying. Okay, we don't want to buy into a accelerating market. We don't want to be buying into an accelerating market, but that's on the macro picture. Like here on this time frame, I don't want to be buying here. My stop loss would have to be here. Okay, but on the lower time frame I can find that trend. Okay, I can trade the trend on the lower time frame, grab my risk to reward relative to the lower time frame, relative to the move down into the micro picture. Okay, and so here price moves up, creates further higher highs. Okay, further higher highs, and then I'm waiting. Here's your low. Okay, higher low, higher low, higher high. Okay, here's your higher high. This candle is 1, 2, 3 candles, so we're at the peak of the third candle. Here we are, right up here. Okay, we're at the peak of the third candle right here. We've created higher highs. The next day, this red candle right here, the next day it just ranged. Okay, it ranged for a while and it started falling, creating these little lower lows, but it created a lower low into a high low territory. This was actually a perfect opportunity right down into 61.8. Nice opportunity to have bought this. Okay, hey look, there's not always opportunities along here unless you bought this based on the higher time frame, you know, macro picture. That's a nice opportunity right there. You would have been riding this, but nonetheless, let's say you didn't, now you're following the trend. Okay, so now you got in here, boom, you've hit target 2, you're out of the trade, got another higher highs, higher lows, higher highs. Here's an example of a higher low that's not confirmed because we didn't go on to create higher highs. So it's okay if this low is breached because we don't have a higher high. Okay, so if anything, we've got higher lows, higher highs, higher lows right there. Perfect. This is a nice trade. If you fibbed that, if you measured it from this to there, you'd have been able to get in on this, all whilst you're looking at the macro picture. How many days in? 1, 2, 3, 4, 5, 6, 7, 8. Okay, 1, 2, 3, 4, 5, 6, 7, 8. You would have managed to buy right there on this low of the candle. In hindsight, you look back and you're like, wow, that's a nice opportunity, right? And you're in, you're buying, you're taking profit. Boom, this would have taken profit up here. You got another high low right here. Price went up, created high low. Even along here, there's an opportunity. If you decided to fib it from here to here, you can get in right there. Okay, and now we're ranging. Okay, we're not creating any further higher highs up here. Okay, up here, what would you have thought? You would have thought, okay, maybe, you know, maybe higher lows. Okay, we're in an uptrend. We're buying. Okay, we're buying. We're in an uptrend. Okay, and then what happens? Price starts turning around. You're looking for an uptrend, and remember how I said, right? When you break previous lows, previous higher lows, when they start being breached, you want to look at that, how it breached this right here. It breached these 2, 1, 2. It breached 2, and so here we can look for lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right into, you know, previous days candles right here. And you're what are you doing? You're looking to sell lower lows right here. There's so many opportunities, so many. Okay, remember, we're looking at all of these as individual moves. We're looking for the retracement. Okay, just separate each move. Even if it's an up move, separate it, look to maybe buy. Okay, maybe it came down, look to maybe sell. Right? And so many of these opportunities, there's so many, you realize you don't even have to take every single one of them. Okay, and now here's where it gets interesting. Okay, because you're on the higher time frame, you're looking at all these days go by, we've just been shooting up, right? On the higher time frame, it's not really moving like this. It's moving, you know, exponentially upwards, and we know that price shouldn't. This is the macro picture, guys. Okay, here's your macro picture where price has literally just shot straight up. Okay, and we know it can't move up forever. And then here we have all that little downtrend, all of those little downtrends on the lower time frame, on the hourly. Okay, on the hourly, it's looking like this. Okay, on the hourly, it's looking like this, right? And so here on the daily, you would have had it measured like this, higher highs. You'd have expected this higher low, and you'd have waited for, boom, these moves up right into your level where it retraces. And these are moves you could have taken advantage of. You see that nice move right there? Okay, and so this is why we don't just stay zoomed in. Otherwise, most people are selling low. Most people are like, oh, lower lows, lower highs, we're moving down. They're just, all they see is this. okay, all they see is this. All they see is this. They're so zoomed in, okay. Excuse, my mouse is playing around here. All they see is this, okay. They're so zoomed in, all they see is this. Oh, we're just moving down, we're moving down, lower high, sell, sell, sell. This is why you have to be aware of the macro picture, because if you had zoomed out, okay, if you had zoomed out of this entire picture, okay, if you had zoomed out of this entire picture, you would have saw this. You would have saw price had gone up, and we're retracing back into last month's candle. Okay, this is, by the way, this is daily time frame, this is hourly time frame, and this is monthly. Okay, this right here is 1 month. That's your first month candle. Okay, I've got it even highlighted. Here's your monthly candle. Okay, you would have expected price to retrace back into next month's candle, which is what it did. Okay, this value right here, this low is that month's low. Okay, and it retraced back into last month's candle, and you would have been looking to buy because you're aware of the macro picture. Yes, you're zooming in. If you're an intraday trader, you can look into the lower time frames and take advantage of all these oscillations on the way up, oscillations on the way down, take advantage of ranging markets. But you want to really maximize your profitability by taking advantage of moves that are likely to occur, these big moves that happen not so often. By the way, they don't happen so often, so we prepare for them as we're trading intraday. If you're an intraday trader, or if you're a swing trader, you would have just sat on your hands waiting for opportunities like this. Okay, and so this really sums up you know, the trend side of things. I've covered, you know, trends changing direction, obviously uptrends, downtrends, ranging, and then obviously trends changing directions, higher time frame, lower time frames, that trends occur across all time frames. It's important that you work your way from a higher time frame, you do top down analysis, you work your way from higher time frames down to the lower time frames. And obviously all these trends, you know, these, I'm drawing lines to kind of point out these peaks and these valleys. But it is important for you to learn candlesticks, and obviously you're going to get into candlesticks. You're going to watch the video and learn more about the candlesticks. Now, hopefully this is kind of, I've summed it up and it's making sense. Bear in mind and keep, you know, remember the rules that we have here. You want to buy as low as you can, you want to sell as high as you can, and never buy or selling into accelerating markets. If markets are being very volatile or they're moving very fast, avoid them. There's no need to be impulsive. Kind of, this is where, you know, self-discipline, self-awareness, your psychology really comes into. Again, separate videos on that. Now, what I've done, I've actually prepared something for those of you who are struggling. Okay, for those of you who are struggling, for those of you who need a sense of guidance, and these videos like this is just not doing it. Okay, I'm opening up my scheduler. Okay, I'm opening up my scheduler for a handful of individuals. It's not for everybody. It's not, you know, this is not for everybody. This is for those who are very committed. They're serious. They need guidance. They need someone to hold them by their hand and observe them, keep them accountable. They need somebody to come in and kind of install the strategy into their brain, okay, and uninstall all the junk that you may have been accumulating over the years. Okay, because I know personally there's people out there who have years and years and years of trading experience, yet they suck. Okay, they're jumping from one strategy to another strategy, and a lot of the times they're really trying to figure out how to combine all their knowledge. For me personally, I'll tell you this, it's really just a matter of going back to basics, okay, and then having someone there to help you, having someone there to guide you and keep you accountable. Okay, because, you know, when you're left there stuck by yourself trying to figure out everything all by yourself, and you don't have a sense of community, a lot of the times you're just one press of a button away from being impulsive, being greedy. Okay, and so I've opened up my calendar for those of you who relate to what I've just shared with you, okay? To those of you who are struggling, for those of you who have been trading for a while, and maybe, hey, look, maybe you are completely brand new, but you wanna dive in, making sure that you're doing all the right things right from the beginning, right from the get-go, okay? Then look, I wanna help you. Again, I'm gonna open up my calendar for a handful of individuals, okay, to book your free. It's free, okay. It's a free one-to-one discovery session. Okay, it's a discovery session where I'll come in and ask you a series of questions to see where it is that you're at, see where it is that you're at financially, because how you're doing financially has a huge impact on your trading performance. Okay, how you're doing psychologically, what's going on in your life. There's a series of questions that I can ask you to really help fine tune and pinpoint, things that we can fix, that we can tweak and fix and work on and apply in your trading journey, so that you ultimately end up with a way of trading that isn't as stressful as you might be currently experiencing. Okay, because again, like I said, trading doesn't have to be stressful. It can actually be simplified. It can be easy if you allow it to be. Okay, now understand that I do share my strategy openly. Okay, I'm giving it away, I'm sharing it with you openly, because the trading strategy itself isn't why most people struggle. Okay, you might be surprised to hear this, okay, but it's true. Trading the strategy isn't the reason why most people struggle. It's because they don't follow the rules, and they have bad habits. They have programming inside their mind, inside their psychology, that's hindering their performance. Okay, and so you need to reprogram. You need to reprogram your understanding, reprogram what it means to have a loss, reprogram what it means to have winning streaks, losing streaks, reprogram your understanding of trading so that you can observe and you can trade from from a different lens, okay, from a different perspective. And a lot of the times you're one conversation away, one idea away from having your aha moment, having your breakthrough. Okay, and I've had many of those throughout my trading journey, and I'd love to share and understand more about you, so I can share my knowledge with you over a free one-to-one strategy session. I've opened up the doors for no more than throughout this week and next week. There's going to be a scheduler link that you can go in and book in and schedule in, and it's not for everybody. So there is a little questionnaire. As soon as you book your time, there's a questionnaire that I'd like you to fill out. Share as much information as you possibly can about yourself, so that we can save time on the strategy session and discovery session, and so we can dive straight into what's holding you back, some of your challenges, and see what we can do to have you flourishing, to have you being more consistent, more profitable. And I'm excited. Okay, let me know how you guys have found this these lessons, how you're finding this session itself. And if you have any questions, again, anything you want to learn more about, any questions on anything that we've discussed so far in this lesson, please go ahead and leave a comment, okay, questions below. I'll be more than happy to answer them. I'm looking forward to seeing some of your questions. And look, let me know how you guys get on. Okay, stay tuned, stay focused, make sure you're always managing risk, watch some of these lessons, watch these videos, and with that being said, I'm super excited to be doing more and more of these lessons, and let's have an amazing trading week. Okay, I'm going to be posting some analysis in the group chat. So again, stay tuned, stay hungry, stay focused. That's it from me, Mamoon Ahmed. Bye for now.